The biggest test of an SME RM is when you receive very urgent requests of SME customers that want money now. Hello, I'm Athanas Mbele. Today we're going to discuss about cash flow, which is the bloodline of every business, and I'm going to ensure that your business doesn't run broke. There's a difference between cash flows and profits because we normally confuse these two. And I must emphasize it's very important for a business owner to be on top of their cash flows, because cash flows is the majority of reasons why SMEs are running around looking for money and borrowing. Most businesses are really making profit, but the problem comes in balancing the money that is coming in and what you're paying out. And that is cash flow. Profit really is the big picture number that really tells you what is remaining after you pay out all your expenses or what is remaining for the shareholders. But the lifeline of any business to measure the survival of a business is ensuring that anytime you have money to pay out salaries, to pay out rent, and to meet your obligations. And you find most SMEs out there are closing shop because they cannot be able to meet their obligations. The number of invoices pending with debtors are so many that are strangling business people's life out of business. Now, how do you ensure that you have money all the time and you are cash flow positive? And by the way, being cash flow negative is not a bad sign. You can be cash flow negative the first month, second month, it's okay. But a consistent cash flow negative business is a business that is not sustainable. And the chances of you making losses at the end of the year is great. So the first strategy is developing a cash flow projection. And I know most of you have already developed 2023 budgets, but cash flow projection is different. And it's simple, it's not financial jargon. It's a very simple document just showing you exact amount of invoices that you're expecting to be paid at a particular time and obligations that will fall due at a particular time. For example, you already know that every month you're paying X amount of salary. Month 5, you might be paying taxes. And so you're able to key in all these payments against every amount of money that you are receiving and pending invoices, so that you're able to know which month are you going to be cash starved. While budgets can tell you whether you're going to make money at the end of the year or what number you need to pull for you to make profit at the end of the year, so that it sets a target for you, cash flow gives you a true picture of whether you'll have enough money to pay your salaries. When you have a bank that really understands the importance of cash flow, like UBA Bank, which has trained SME RMs to be able to troubleshoot any business request that we receive, to know what is the cash flow gap. Because we get customers that are coming and they need money urgently, they need the money yesterday. It's not that the business has no money or the business is loss making. It's just the balancing of invoices that are pending out there. And while we appreciate this fact, we understand our role as SME staff of UBA to be able to guide our SME customers to understand their cash flow gaps. This will enable two things. The first thing is knowing the exact amount of money that you need to survive all through the year without having sleepless nights, whether you're able to meet your cash obligations, rent, salaries, and taxes, and even paying for raw materials. We deliberately have the first conversation of looking at the cash flows that you're expecting to receive throughout the year and the expenses that you are to undertake, so that we are also looking at how long are you going to wait for your money, so that we match your loan repayments with the cash flow gap or the waiting period that you have with your customers. But something else that you need to be keen about as an SME is to ensure that your cash flow is real. You can be optimistic with the budget, but when it comes to cash flow projections, you have to ensure that you are putting realistic figures. You are putting timelines that are real, So if you're expecting a payment that is coming from a certain customer in month 5, you know these customers delay, you are able to place that inflow in a realistic month. And that's why we call ourselves Africa's global bank, because we believe that we are meant to enable trade across Africa, and more importantly, to be able to understand the pain point of SMEs. And one of the biggest pain points that we are talking about today is cash flow. And if you are having any challenges with your cash flow, then please walk to any of our branches, 5 branches across Kenya, and you will find a dedicated team of SME RMs who will be able to help you sort out your cash flow deficits. In the next part of this series, we are going to talk about how your bank can help you caution yourself against cash flow crisis.